Welcome to Real Vision Crypto. I'm Ash Bennington. Today, I'm here with Ben Cowen, CEO of Into The Cryptoverse. Ben, welcome back to Real Vision Crypto.
Thanks for having me. It's always a pleasure to come on here and talk about crypto.
Well, it's a pleasure to have you back by popular demand. You were just on in March, something that our subscribers really enjoyed, the way you walked through these charts. Ben, what are we going to talk about today?
Yeah, I think we should probably talk about the general state of the market and really focus on kind of where Bitcoin is and the current risk that exists on altcoins. I think that's probably the most pressing issue right at the moment.
Yeah, we should say we're filming here on the morning of Monday, April 25th, 2022, just for reference so people understand what we're looking at when we see these charts in terms of time.
Sure, yeah, the markets can change very, very quickly. Um, Yeah, I think in general, and this is something I talk about a lot on my channel, is the risk on altcoins. We know that altcoins can give nice gains when we're in a bull market, of course, but they're also quick to give back those gains if we're in a bear market. And so I think the best thing to do is to start off with trying to understand where Bitcoin is right now.
Right.
And that would probably go a long way in helping us really start to understand the risk on altcoins, right? I mean, and because altcoins fundamentally act very different depending on what Bitcoin's doing. And my biggest concern right now in the short term is remain some of the similarities between prior bear markets that Bitcoin has experienced and what we're going through right now. Now you have to remember, not all bear markets are the same, right? Some are shorter, some are longer, some go down 80%, some go down 50%. They're certainly not all the same. But with that said, one of the things that you should note is the Bitcoin price and how it relates to the Bitcoin dominance. And if you understand the Bitcoin dominance, and if the dominance is likely going to go higher, then that means that all Bitcoin valuations are likely going to go down if obviously Bitcoin dominance is going higher. So
Let's explain just a bit for people who may not know. Bitcoin Dominance Index, sometimes called BDI, is the percentage of total aggregate market capitalization represented by Bitcoin versus all of the other cryptos currently trading.
right, exactly. And actually, why don't I just go ahead and pull it up? The thing about the Bitcoin dominance is over the macro scale, it does tend to go down. Like the general direction seems to be this way. But we're at a spot right now, and I want to talk about how critical the spot is that we're at. All right. So the way to look at this is to say, when was the last time under similar market conditions that Bitcoin dominance was at this level? So if you go back to 2018, you can see that we were at this same level in June. Okay, so in June of 2018, the Bitcoin dominance was at around the same level. And the reason why that is interesting, and it's almost like a carbon copy up to this point to some degree. Again, it doesn't have to play out the exact same way, but if you go look at the dominance then, it was just below 42%, right? As of April 25th, we're sitting just below 42%. And then if you go look at what Bitcoin's doing, it's doing the same type of trend right here. Okay.
Mm.
The same exact trend in terms of, we're technically putting in higher lows. And this is what I would say a lot of bulls remain in the market. And the reason is because we're putting in higher lows. Okay. So a lot of times in a bull market, you put in higher lows. So it makes sense that there are people that are still saying, look, higher lows, there's no guarantee that we're going to get a bear market. And they could be right, right? Like they certainly could be right that we'll just sort of put in higher lows and not go down to those lower levels. But what you'll notice is when Bitcoin did put in a lower low, okay, this is the risk on the market right now. When Bitcoin put in a lower low in June of 2018, that was the first time in a long time, as you can see, that Bitcoin put in a lower low. Because before that, you could just argue everything was just a slightly higher low, right? And remember, that's June of 2018. What happened in June of 2018? That was when we put in a lower low. That was also when the Bitcoin dominance started going up quickly. Okay, so
Interesting.
how was the Bitcoin dominance going up quickly? Well, Bitcoin was dropping too, but it wasn't really dropping that bad. I mean, think about it. Like it dropped down, put in a lower low, but then it came right back up. So to give you an idea of what that would look like today, if history were to repeat itself, it would mean that Bitcoin would ultimately break this trend line to the downside, which you could already argue it's starting to do. If we put in a lower low and then come back up, let's suppose we come back up to say the low 40Ks or something like 41, 42K, back to the 200-day, which by the way, that's what happened in 2018, right? So we were on this trend line and then we got rejected at the 200-day, and then we came down to put in a lower low and then back up to the 200-day again. And so if this pattern plays out, then the funny thing is that the price of Bitcoin might not really do a whole lot for, a few months,
Hmm.
but the risk on altcoins I think would be a lot more significant. And the reason is because you can see that the price of Bitcoin during this phase over here, it didn't really do a whole lot. To relate it to prices today, you're talking about Bitcoin basically staying between like 30 to 45K for months, right? And it's funny because Bitcoin might not do a whole lot, but it didn't stop the Bitcoin dominance from really shooting up. Okay, so like if I let me share this tab. This is the tab I wanted to share. So like you can see like Bitcoin was putting in lower lows over here in January of 2018, April of 2018, and June of 2018, rejected by the 200-day SMA, a lower low, back up to the 200-day SMA.
Orange
And
line is 200-day SMA, simple moving average.
exactly. And so the thing is we're sort of looking at a very similar pattern here, right? Like a low, a higher low, rejection, and then a higher low, and then it falls below, and then back up to the 200-day. So that's what I'm watching right now, because if this plays out and we put in say like a lower low, let's say we go to the low 30Ks and then back up to the 200-day, Bitcoin's price might be fairly constant for months to come. Like it could be 30K, 40K, 45K for months to come. But the dominance could still go up a lot because people
Yeah.
just aren't likely going to speculate on altcoins if Bitcoin, just remains somewhat bearish.
Let's flip back to that dominance chart and just walk through a couple of the points there.
Yeah. So when looking at the dominance chart, the thing to remember is that in order for altcoins to be bullish, usually you need to see the Bitcoin dominance go up first. Okay. So
Hmm.
if you look in June of 2018, that is where the dominance went up. Okay. So this is where the dominance went up in June of 2018 when Bitcoin put in a lower low. And the altcoin rallies didn't really resume until Bitcoin went on a parabolic rally of its own. Not like, at least when you're talking about an actual crazy manic alt season like we saw at the beginning of 2021. And that's what happened here.
Right.
Happened here.
So just to walk through the obvious here, if you zoom the chart out a little bit, what you see on the left-hand side of that chart in pre-2017, the reason that you see BDI at 100% is effectively that Bitcoin was the only cryptocurrency there was.
Right.
You see that very steep drop in 2017 when I first started getting into this seriously, when you saw this flourishing of different types of altcoins, when we saw Ethereum and other coins come into the cryptoverse. And now what you see is this kind of this cyclical pattern that you're talking about. Talk a little bit about what you've circled there on the right, the 2021 high on BDI.
Yeah, so it's basically similar to 2017, like the last part of 2017.
Hmm.
This is when Bitcoin's price is going up too quickly for altcoins to keep up. Okay, so basically Bitcoin goes parabolic, or sorry, the Bitcoin dominance goes up under two main conditions. Either Bitcoin's price is going parabolic or Bitcoin is in a bear market and it's trending down. That is
Hmm.
what sends the Bitcoin
So
dominance
it's two
higher.
opposite ends of the spectrum in terms of price action.
It is, but that is what causes the dominance to go up. It's
Yeah.
a parabolic move by Bitcoin, or we're just in a bear market, because that's when all a lot of the froth of the altcoins. I mean, again, there are a lot of great altcoins out there, but we also know there's a lot of not so great altcoins out there as well. And the bear markets have a way of sort of cleansing the space a little bit.
Hey,
Um,
Ben, is there any way you can tell by this chart which of those two conditions is happening? In other words, can you tell whether it's a parabolic rally or a bear market based on something in terms of the patterning of the chart, or do you just have to look at price?
It's a good question. I don't actually know the answer to that one off the top of my head. I mean, I'd have to maybe break it down a little bit more. I mean, just visually looking at it, I don't know if there's any clear difference between them, because I mean, even actually, if you go this was also a parabolic rally for Bitcoin. If you
Hmm.
remember in 2019, I mean, we don't really talk about 2019 that much, but the first half of 2019, Bitcoin went up 4x. So it was a pretty big move. I don't. I would say maybe the one of the biggest signs is in the bear market of 2018, the second half of 2018. We just kind of went straight up. Whereas in some of the bull markets, you can kind of see that the dominance would hesitate for maybe a few weeks at a time, while altcoins tried to catch up, but we're somewhat unable to do so. Um, so I
Yeah.
think right now we're in a phase. We're at a very critical point because the dominance has not made that move yet. We're still at 42%, right? Why? Bitcoin hasn't put in a lower low. If it puts in a lower low, that's where you're going to see alt Bitcoin valuations really lose their steam.
So interesting.
Yeah, I mean, I think that really it's just a cyclical game, and the thing to note though is that we're very likely looking at still a macro downtrend. So if we were to come back up, I don't anticipate we would come up to 73%, right? It may be somewhere between 50 or 60%, but then I would ultimately kind of expect this macro trend to continue in a downward direction.
Yeah, so in other words, if you project this BDI chart forward, say a decade, it's your belief that ultimately it will be lower as altcoins and other types of crypto assets begin to gather, accumulate, accrete value.
Right. And I think too, when you think about the health of the market right now, to me, it feels fairly clear that for altcoins to do well, we either need for Bitcoin to go parabolic, meaning altcoins will do well after Bitcoin goes parabolic, or we just need to go through a bear market. And that's really the two things. And so the best strategy to navigate that, in my opinion, is just to be heavy Bitcoin, because it's like, and I mean, of course, to have cash on hand if it is a bear market, I mean, not to just be fully deployed, but if the idea is that Bitcoin needs to either go through a bear market or go through a parabolic rally for altcoins to do well again, then by association, the natural logic behind that would just be meaning be heavy Bitcoin until things look better.
Yeah.
So I think the other thing I want to talk about is the total crypto market cap chart. Okay, so right now we're sitting at just around 10% overvalued. Okay, so I look at this chart and I say, first of all, not all bear markets are the same. We've had 2014 bear market, we had the 2018 bear market, we had the second half of 2019 bear market, and some of them are brutal and some of them are not. Well, they're all brutal to some degree. um, but right now, the fair value of the asset class, according to this chart, right, according to the fair value regression trend line, is at around 1.63 trillion. And the
Hey,
asset
Ben, let's
class,
just give a little bit of the big picture of what we're looking at here. First thing to note, probably we're looking at a semi-log Y chart. If you look at the Y axis on the left, you'll see that this is a logarithmic scale. And what this is showing is the total market cap across digital assets, across cryptocurrency. Walk us through a little bit of the big picture of what you're seeing here. Obviously, it is a chart that shows the dramatic increase in valuation over the last 11 years, but give us a little bit of context of what this means.
yeah, basically the idea of the chart is to just show the various boom and bust cycles of crypto in general. And it does really look familiar, like it just looks sort of like the Bitcoin chart, but as you said, it's the total cryptocurrency market
Right.
capitalization chart. And the idea is that as the years go on, we notice that the entire asset class goes through phases of being undervalued and phases of being overvalued. And this is with
Right.
respect to what we would call the fair value. And the fair value under this circumstance is just derived from a logarithmic regression trend line. The reason I'm using logarithmic regression is because these log regression trend lines, they do a really good job of showing exponential or more accelerated growth early on, and then because of the law of diminishing returns, you see that tempered every time we go back up. So the idea is that there's phases of undervaluation, there's phases of
Right.
overvaluation. You can think of it as like a bull market versus a bear market.
Yeah, what's
And
interesting to me, just on its face, is that while you have this boom bust cycle, these bull markets and bear markets, that you see this trend line of dramatic accumulation, dramatic increase in the aggregate price around that logarithmic center line. banded in a relatively narrow range. I mean, obviously, this is the y-axis represents because it's semi-log y a great deal of change per unit that you move up or down. But still, it's striking how those two green bands constrain in a relatively narrow range that variability.
Yeah, I think too, as the asset class matures, I think there's going to just be less and less moves to either end of the spectrum. One of the reasons is just because everyone's sort of wising up to what's going on. You know, like everyone's sort of like, hey, I don't want to be the guy that gets left holding the bags at the top. And therefore they're more likely to sell earlier than perhaps people a cycle before them. But that also could be true to the downside as well. You know, the people that might be waiting for the lowest band to be hit again. You also have to imagine there are people that have waited in the past for lower prices and they missed out because they kept waiting and waiting, and they're probably going to be like, they don't want to be the person that misses out. They would rather just get into the market if they think it's a fairly attractive price. Because what you'll notice by looking at this chart is you can see kind of like peak, peak, and peak on that upper green line. But this cycle, we haven't really hit that. I mean, in order for us to have gone to that back in early 2021, the total market cap would have needed to have gone closer to 6 trillion. We didn't make it to 6 trillion, clearly, right? We only made it to 3 trillion by November or so of 2021. And so, I look at the chart and I think that, the right now, the asset class is fairly valued. I think that, just is slightly overvalued based on this trend line, but only about 10%. To give you an idea, back in say April of 2021, we were 235% overvalued or something.
Now, what's this chart that we're looking at? What does the yellow line represent?
Yeah, so it's actually a shift. So it's basically just taking the market cap of the asset class. So it's taking this blue line, dividing by the red line, and then it's
Hmm.
actually shifting it by 100%, so that everything undervalued is just because I'm putting this on a logarithmic scale. So basically, you're just looking at the percent difference shifted by 100% of the market cap divided by the fair value is what you're essentially looking at. And so
And
the
the
idea is,
100% shift is to try and normalize for values below the line. Is that right?
right, because we're looking at a logarithmic scale. So I just did it like that, so that like if it says 40%, that means like we're 60% undervalued, if that makes sense. Um, if it says like 80%, it means we're 20% undervalued. Right now, you can see we're basically at around, we're just slightly above the fair value right now. So I think if you're a long-term investor and you're looking for good value investing, then obviously it makes sense to try to come in when the asset class is undervalued
Right.
as opposed to being overvalued. But when you are overvalued, that's sort of where the people chase the trend, right? You
So if we
chase
flip back to that chart that you were just showing with the yellow line, those progressively lower peaks represent this notion that there is less overvaluation occurring. So in other words, as you see those five peaks dropping from left to right, it's essentially saying that it's relatively less overvalued relative to the central trend line with each progressive cycles. Is that sort of roughly correct?
Yeah, it is, and that's sort of why we talk about diminishing returns and understanding that we are likely to see diminishing returns. Um, and going back to this chart, this upper green line, it is slightly different than the lower one. So the upper green line is actually slowly converging on the red line. So eventually they will meet each
Hmm.
other off in the distant future.
But if they meet each other, that sort of suggests that there'll be no overvaluation, right? So they can't quite ever really meet. It's just the percentage relative to the trend will be continue to decrease, almost maybe like in an asymptotic way. Or is that
Right.
not summarizing accurately what the chart
No,
suggests?
it is. The deviation is becoming less pronounced as time goes on, right? So, I think that I still sit in the camp that, we could still see a parabolic rally, eventually, to take us up to the upper trend line. But remember, in order for us to see that, Bitcoin needs to carry that, it needs to carry its fair share and show that the asset class is in fact healthy. Right now, we're just sort of hugging the fair value regression trend line.
Hmm.
So it's sort of just like a boring phase in the market, to be completely honest. So I think something else that's worth looking at, because I think it's fair to say that Bitcoin controls the health of the market. I think that we understand that in
Right.
order for altcoins to look more attractive, Bitcoin either needs to go through whatever bear market it's going to go through, or it needs to show strength and start pushing higher again. And so the way I think about this is I look at what I would consider to be the fair value of Bitcoin. So the fair value of Bitcoin, like the last chart, which was for the entire asset class, but for just Bitcoin, the fair value, according to a logarithmic regression trend line, so again, the same type of trend line that we've discussed before, where the more accelerated growth happens earlier on, and it rolls over with time. This again, as we were looking at the other chart, semi-log scale. So the primary y-axis is on a logarithmic scale, meaning each major tick is a 10x move. So when we look at this chart, what we can say is that the fair value as of April 25th is just below 37K. That is the fair value fit to all data. Okay, 37K. And the reason I like this chart is because I think it does a really good job of really distinguishing between, say, one market cycle and another market cycle. Okay. And I know market cycles are somewhat subjective as to what even constitutes a market cycle. But if you think about it like this, if you say, you know what, a market cycle is defined as spending some time undervalued. Okay. So if Bitcoin goes back to being undervalued, then I think we would argue we're looking at a new market cycle. If we are still hugging the fair value regression trend line, then I think the argument is that we are in the same market cycle, or that we could still be in the same one. The reason this is important is because it's important to understand the level of diminishing returns that we may expect to see. Okay. So, what I mean by this is if you look at where we are today, okay, look closely where we are today, we're in our regression band, and compare it to any time we've been in this regression band in the past, following a parabolic rally. There have been 4 times, right? 4 times. And one was here in 2011 and we fell below. One was in 2013 and we held it. And if I zoom in here, we actually came down to the bottom, all the way to the bottom of the fair value. I mean, the fair value was $80 at the time, right? Bitcoin has a way of just, you give it a few years and the prices we worry about eventually seem so silly. But the price that we were worried about in 2013 would have been $80. And we held it, and we ultimately went on to put in a much higher peak.
Right.
In 2014, we fell below, and in 2018 we fell below. So there's been 4 times, really. There's been 4 times that we really tested the lower bound on the regression band, and out of those 4 times, 3 of them we fell below it and ultimately started a new market cycle. So the
Hmm.
fair value right now, this is where I think it gets really interesting for me. The fair value right now is around 37K, right? The lower bound on our regression band is 30K. Why is 30K so interesting? The reason why I think 30K is so interesting, to just pivot really quickly to go back to that chart we were looking at earlier, the 30K level is fascinating from a market structure perspective, because that is the summer of 2021 low, right? So
Hmm.
if Bitcoin, let's suppose that Bitcoin puts in a lower low, okay, and it follows what 2018 did for a little while. Remember, it doesn't have to follow it the entire time. It could follow it for part of the time, then maybe go on a different path. But if Bitcoin comes back down to the 30K level like this, or maybe we bounce for a while. I mean, maybe it takes us a while to get there. I don't know, but let's suppose that we have to revisit 30K just just out of as a structural test of the market. We go back to the 30K level. That would actually correspond to the lower band on the regression band. But remember, back in the summer of 21, the lower bound was at 21K, not 30K. So the fundamental idea that I operate on with Bitcoin and the entire asset class is that the fair value of the asset class is a monotonically increasing function, meaning it only goes up with time. Okay, it
Hmm.
only goes up. So the fair value back in the summer of 2021 was was around 27K. The lower bound was at just around 21K. Today the fair value is 36K with the lower bound at 30K. So the reason why this is important is because if we hold 30K or the summer low, right, 29K, 30K, if we hold those levels, then I think we're still looking at the same cycle. And the reason why that's important is because we don't want to understand where we would be with, say, like diminishing returns and understanding how high we might be able to go. But if we capitulate below the fair value, okay, and let's say we go back to 20K or something. I know there's a lot of people calling for 20K and whatnot. If we go back to 20K and we come to back to the undervalued territory like we did in 2018, like we did in 2014, 2015, like we were at in 2020, we're looking at a new cycle at that point. And the reason why that's important is because that's where all the real money is made. I don't know when exactly it's going to occur, but whether it occurs this year or next year or 3 years from now, the undervaluation territory is where all the real money is made, because you really want to buy in the bear market, right? You want to buy when no one else wants to buy. And that way, whenever we go back above the fair value, then you're really in the money. If you wait for us to get back above the fair value, then you're just sort of chasing the tail end of a bull trend, right? But if you buy when no one else wants to buy, that's where all the real money is made.
Really interesting. Worth pointing out, when we talk about fair value in this context, what you're referring to here is the fair value implied or estimated by the regression analysis, not a mechanistic calculation of fair value like you would
Right.
see, for example, with S&P futures. It's important to know that this is that there is a degree of speculation, a degree of inference when you think about fair value in this context.
Exactly. I mean, you could even argue that the fair value of Bitcoin is just whatever the price someone's willing to pay for it today. Not whatever this trend is showing. Um, but I just sort of use this stuff to try to figure out if we are, kind of where we are within the grand scheme of market cycles, and to understand, if we hold the summer lows, then we're looking at probably something between 100 to 200K if we don't capitulate below. But if we capitulate below, then you're likely looking at, I mean, if history is any indication, you're looking at maybe 6 to 12 months of being undervalued before being able to go back above to becoming overvalued again.
Hey
Um,
Ben, let me ask you a question based on the most recent bear cycle that we were just looking at there. Any sense of why you're talking about this rising level of the lower bound from 21,000 to 30,000? Any reason why we didn't go down to the 21,000 on the last bear cycle? Can you get a sense of that from this, or is there just some degree of variability that's difficult to control for?
Yeah, I mean, I think part of the reason is because this cycle has been very different from any other cycle we've really seen. Okay. So in prior cycles, if you think about like the 2016, 2017 cycle, we would go up for a bit and then we'd come back down, right? We'd go up for a bit and then come back down. And this cycle, it was just like straight up, basically. I mean, it was just, I mean, we were at 3,800 back in March of 2020, and then a year later, we were 10x higher. So we went up very quickly, with really few pit stops along the way. I think, if you think about where we were in mid 2021, I think one of the reasons why we didn't go down further is because, I mean, from more like a macroeconomic point of view, the Fed, they weren't tightening yet, right? We were still printing tons and tons of money. They were not raising interest rates. I think one of the main reasons we went down was for two reasons. First of all, number one was a lot of people came in late to the game and were leveraged out of their ears, and a lot of that wick that you saw was a lot of just people getting wiped out from their, from being over levered. Um, and then second of all, I think the reason we saw that correction was because a lot of times in the summer, Bitcoin doesn't do a whole lot, right? And it's sort of like the dog days of summer. I mean, this occurs a lot with Bitcoin, where other cryptocurrencies might do okay, but Bitcoin oftentimes just kind of doesn't do a whole lot in those months. There's a couple of exceptions, but even if you go back to 2017, I distinctly remember in June and July, wasn't really sure. A lot of people weren't really sure what was going to happen. Was it going to go up for that parabolic rally, or were we just going to sort of fold over? So I think it's a couple of things. I think we just sort of were wiping out some leverage, and also recognizing that those summer months aren't that great. And then furthermore, from a macro sense, it wasn't the doom and gloom wasn't quite as bad in terms of all the FUD being spread as it is today. Like today, everyone's talking about the Fed and what's the Fed doing. They're talking about inflation, the Nasdaq and the S&P potentially putting in lower lows, and I think it's putting a little bit more selling pressure on Bitcoin than we were back then. So, really when thinking about logarithmic regression and where we are with respect to the fair value, the one thing to remember is that the actual price it's relative, right? Like a 39K Bitcoin today means something very different than a 39 Bitcoin a year ago, and a 39K Bitcoin a year before that. Think about 2018.
Mm.
A lot of people were calling for us to go back to 20K, and that meant something very different than the people calling for 20K today, right? Like 20K today is a bad thing, but 20K back then was a good thing. So
Precisely because of your notion of fair value and its relative positioning to that number.
exactly. Like it's all relative. So like again, if Bitcoin were to go below 37K, then you could argue from this chart it's undervalued. Even again from a fair value regression trend line chart, you could argue that anything below 37K is undervalued, whereas back in late 2020 that would not have been the case. Now, the chart I really want to look at is this one, as we sort of transition here, and this is a different chart than the one we just saw. So the one we just saw is fit to all data. Okay, so I don't discriminate against any data set. I just take all the data and it's fit to all the data so that we're not cherry picking what we want to cherry pick to tell a narrative that we might want to tell. But in this chart, we are cherry picking. Okay, and this chart I created it in 2019, and the idea was to fit it to quote unquote non-bubble data for the green band. Okay, and what I meant by non-bubble data is basically subjectively looking at the prices and saying, you know what, in 2011, this is non-bubble data before we went into a bubble phase. In 2013, this is or 2012 and 20 early 2013, this is non-bubble data. So let's fit it to this data here, and then we're also going to fit it to 2015 and 2016 data and early 2017 data, which is I still would argue before a bubble, right? This is the 2017 bubble that happened in the second half of 2017, and then I fit it all the way through early 2019. Okay, so the data was cherry picked. I don't fit it to all the data, just what I would consider to not be inclusive of a bubble. And the last time that we were at the fair value of this curve, which is fit to non-bubble data, so you can kind of think about it as like the undervalued territory. So like if we go to these prices, it means that essentially if history is any indication, it's like the best time to buy Bitcoin, right? And we've spent a lot of time in these bands before. I mean, look at 2015 and 2016 and early 2017. We spent a lot of time in that band. Spent a lot of time in it in 2019 as well, and in 2020. So the question is where is that band today, right? That's always where is it? So today, the actual undervalued area, again, fit to just non-bubble data, puts it at around $22,000. So if Bitcoin goes back to 22K, I would argue that that's sort of like accumulation phase of a lifetime type things. Okay, like we don't see those phases that often. When they do occur, it typically is a really good time to buy Bitcoin, right? We haven't been in that area in a long time, and we've basically just been in no man's land for a really long time. The last time we left the regression band down here was all the way back at the end of 2020, and we sort of poked our head in the upper regression band a little bit, but we didn't go up to the top. And part of the reason maybe we didn't go up to the top is because people are wising up to to what's going on, right? So you're seeing less and less deviation each cycle from whatever the fair value is because every cycle there's more and more people recognizing, hey, I don't want to be the schmuck. Let's stop, that's left holding the bags at the top. Therefore, I want to make sure I take some profit. So I think you're sort of seeing that, and it sort of formed this distribution phase here.
And that's why you see that convergence on the long term as you look at those bands, is that you're seeing that sort of winnowing out of variability across this continuous rise pattern, as you would say, relative to fair value.
Exactly. And the one thing I constantly do is I try to like play devil's advocate against myself, and try to figure out like, okay, if something seems so obvious, what am I missing? Because usually when something seems obvious, you're missing something because a lot of times the markets do something that's not the obvious thing to do. Um, so the other interesting thing, and sort of tying everything back together with respect to market cycles, is that 30K level, I think, is an important level. If we fall below that, we're looking at a new cycle, a fresh cycle where we have to start from square one. But if we hold it as support, the interesting thing is the upper bound on this regression line, the upper bound on the lower one, is at around 30K, just over 30K. And again, why is 30K important? Well, it's the fair value fits all data. Okay, right? If we go back to that chart, it was the fair value, or sorry, it was the lower bound here, 30K. Again, as we said before, it also corresponds to the summer of 2021 low. So, I constantly ask myself, um, when I look at when I look at charts like this, will we make it back down to these undervaluation territories? Because I know there are a lot of people thinking we will, and we certainly could. But the one thing I'm not so sure of is, in the same way that in 2021 we never really made it that far into the peak regression band. So, is it possible that we would just sort of hug the bottom one and see like diminished volatility to the upside and the downside? I'm not really sure about that. I do think there's a good chance that Bitcoin will go retest the low 30Ks at some point. And at that point, it'll be time to decide if we capitulate and start a new cycle, or if we somehow hold that structure and continue higher.
So, Ben, we've looked at some of these price series regression analysis data. Let's take a look at some of the on-chain data. First, explain for folks who may not know what on-chain data is and why it's significant.
Yeah, so with cryptocurrencies in general, like Bitcoin, like Ethereum, you can actually see transactions that are occurring on chain. Okay, it's a distributed ledger, so we can kind of see what's going on. Now, it doesn't capture all the data. That is the caveat we always have to say. If you're trading on an exchange, like a centralized exchange or something, it's not going to capture that. Furthermore, it could be theoretically manipulated if someone, say, had a Bitcoin and then they decided to move that Bitcoin around. Perhaps they're not selling it, but they're just moving it around for the sake of moving it around, or maybe
Like a
they're,
wash trading type
yeah,
situation.
yeah. So there's a lot of different things you have to consider with on-chain data that isn't necessarily the most insightful. But with that said, there are really great trends that seem to repeat themselves. One of the things is to look at the HODL waves, and the HODL waves are essentially the percentage of supply of Bitcoin held in addresses for varying lengths of time. And when you look at it like this, it's kind of hard to see what's going on when you have everything up. But what we can do is we can only look at long-term holders. And in this definition of long-term holders, it means that anyone who has been holding Bitcoin for at least 6 months. Okay. So what you notice when looking at on-chain for the on-chain data and the HODL waves, what you notice is that, and I think this is something that I always struggle with, is it always seemed like on-chain data seemed bullish all the time. From what I saw online, that everyone was always bullish on-chain data. And look, from a decade-long perspective, Bitcoin has basically just always been in a bull market. But what's interesting is that when long-term holders are accumulating, okay, like when you're just sort of DCAing into the market and your Bitcoin is slowly getting older, you see these plateaus in long-term holders. And what's interesting is that by the time it plateaus, by the time it first hits that plateau, based on what we've seen in the past, Bitcoin is about halfway through its bear market, right? This is just what we've seen in the past. I mean, not every time, but if you look at 2014, by the time long-term holders plateaued, that was in September of 2014. So we had a few more months of a bear market before reaching an accumulation phase. And then if you go look at 2018, by the time it really plateaued up here, it was September again, and we had just a few more months of a bear market. And you could argue that yet again we sort of have plateaued here in early 2022, and that we are still in the latter half of a bear market. And I look at this and say, what do you notice? Every single parabolic rally, every single one, the long-term holders sell, and the percentage of Bitcoin being held by long-term holders goes down a lot. I mean, this is going from like 70 something percent down to 40 something percent. You're talking about a 30% drop in the amount of Bitcoin being held by long-term holders at a peak. The same thing we saw in 2021. The same thing we saw twice in 2013, and the same thing we saw in 2011. What you will also notice is that November of 2021 did not see that same peak. So what that tells me is that, and I also fall into the same category. Okay, I fall into the same category. I just buy Bitcoin when I feel like the market's bearish, and then I wait for a parabolic rally to occur, and I sell into that strength. So I sold into this, but this one I didn't sell into, and one of the reasons is because I prefer to go for those larger multiples. And also having sold a lot of Bitcoin up here and then starting to reaccumulate it down here, it only went up about 2 more X. And you can see there's a lot of people that sort of fall in that camp because there was never really a big drop in the percentage of Bitcoin being held by long-term holders in late 2021, despite the fact that we went up to the same price. I look at this chart and I think the reason is because a lot of the people, especially like long-term holders like myself, a lot of them probably didn't take profits in late 2021 because if they were going to take profits, they probably would have already done so in early 2021.
Hmm.
That's sort of the way I sort of look at this chart. And again, these are long-term holders. What you really want to see, you want to see short-term holders going up. That's what signifies the parabolic rally. Okay, look at 2011, look at two peaks in 2013, look at 2017, and then look at early 2021. You'll see a spike in short-term holders, meaning people who have been holding Bitcoin for less than 6 months. And when you see these peaks, that's when you should be running for the hills with your profits, right? If the peaks aren't here, then it's just a boring time in the market, and there's just some chop to go. We're in, I call it like hodler country. The tourists are gone, and as long as the tourists are gone, it's going to just be a choppy market. We could go to 30K, we could go back to 40K, we could go lower than 30K. It depends on how long it takes for the short term tourists to return. And you'll see it. You'll see it on this chart when it happens. You'll see this go up, and when it goes up, that you'll likely go back to look at long-term holders. You'll likely see the long-term holders selling to the short-term speculators.
And fascinating stuff. Final points, key takeaways that you'd like to leave our viewers with.
Yeah, so I think some of the key takeaways right now are, it's a very emotional time, I think, in the market because a lot of people are getting impatient, and especially people that joined in 2021. If you started accumulating Bitcoin and you probably bought some at 30K and at 40K, maybe 50K and whatnot, and you've been doing this for a long time, and it's getting hard, right? Because the market just hasn't done a whole lot for, at least for Bitcoin, in quite some time. I think the thing to consider is that there's a lot of evidence to show that long-term holders are accumulating. Okay, we're getting closer to undervalued territory. So the idea is that if you can just stick this thing out for, again, a few years, you will likely be happy that you did. If you capitulate and then you just return when the market is manic again, then you basically fall into the same trap all over again. So if you want to be the smart money, you actually have to stick around when the market is bearish, and then you have to be willing to take profits when everyone tells you it's only ever going to go up.
Yeah. Ben, great to have you back. Looking forward to doing this more regularly in the future.
Yeah, thanks again for having me. It was a pleasure to be here.
Thanks for joining us, and thanks for watching, everyone.
Hey there, revolutionaries. Thanks for tuning in. For more content like this, head over to realvision.com/crypto and get unfiltered access to the most brilliant minds in finance and crypto. Join our community of lifelong learners for exclusive access, unparalleled education, and unbiased insights.